Could digital currencies put banks out of business? Let me ask you something that most people aren't ready to confront. What if the very place you trust to keep your money safe is the system most at risk of being replaced? You walk into a bank, swipe your card, check your balance, and everything feels normal, stable, secure, familiar. The system has been around for generations, so it must be reliable, right? But beneath that sense of stability, something massive is shifting. A quiet revolution is happening, not in headlines, not in loud announcements, but in code, in networks, and in how money itself is being redefined. And if you're not paying attention, you might wake up one day and realize the system you depended on is no longer the system the world uses. Today, we're going to answer a question that sounds extreme, almost impossible, but is becoming more real by the day. Could digital currencies actually put banks out of business? Stick with me, because the answer isn't as simple as yes or no, and by the end of this, you'll understand not just what's coming, but what it means for your money, your future, and your financial security. Before we get into whether banks are in danger, you need to understand what makes digital currencies so powerful and why they're not just another financial trend. At its core, digital currency is exactly what it sounds like, money that exists entirely in digital form. But that definition barely scratches the surface, because unlike traditional money, which relies on banks, governments, and intermediaries to function, many digital currencies operate on decentralized systems. That means no central authority, no bank, no middleman. Take cryptocurrencies, for example. Instead of trusting a bank to process your transaction, you're relying on a blockchain, a transparent, secure, and distributed ledger that records every transaction across thousands of computers worldwide. No waiting for approval, no bank hours, no hidden fees layered in the background. You send money and it arrives. That's it. Now pause for a second and think about that. If you can store your money, send your money, and verify your money without needing a bank at all, what role does the bank actually play? That's the question shaking the entire financial system. Because for decades, banks have been the gatekeepers of money. They hold your deposits, facilitate payments, issue loans, and act as the backbone of the economy. But digital currencies are slowly starting to do all of that, faster, cheaper, and in some cases, more securely. And that's where things start to get uncomfortable for traditional institutions. Let's break it down. The first threat digital currencies pose to banks is control. Banks don't just store money, they control access to it. They decide when transactions go through, how long they take, and sometimes even whether they happen at all. But with digital currencies, especially decentralized ones, that control disappears. There's no one to approve your transaction, no one to freeze your account, no one to delay your transfer because it's the weekend. For users, that's freedom. For banks, that's a loss of power. And power, in the financial world, is everything. The second threat is speed and efficiency. Traditional banking systems are slow, especially when it comes to international transfers. Send money overseas through a bank, and it can take days. There are multiple intermediaries involved, each taking a cut, each adding time. Now compare that to digital currencies. Cross-border payments can happen in minutes, sometimes seconds, with significantly lower fees. And when businesses start to realize they can move money globally without friction, the traditional system starts to look outdated. Then there's cost. Banks make billions from fees, transaction fees, overdraft fees, maintenance fees, foreign exchange fees. It's a system built on layers of charge.
Because the truth is, banks don't just provide transactions, they provide trust. People trust banks to safeguard their money, to provide loans, to manage risk, and to offer financial stability. And that trust isn't easy to replace overnight, especially when digital currencies come with their own set of risks. Volatility, for one. Cryptocurrencies can swing wildly in value. What's worth $10,000 today could be worth $8,000 tomorrow, or $12,000. That kind of instability makes it difficult to rely on them as a primary form of money. Then there's regulation. Governments aren't going to give up control of monetary systems easily. Expect tighter regulations, more oversight, and evolving legal frameworks as digital currencies grow. And finally, security. While blockchain itself is highly secure, the platforms and wallets people use can still be vulnerable. Hacks, scams, and lost keys, these are real risks that don't exist in the same way with traditional banking systems. So, no, digital currencies aren't a perfect replacement, at least not yet. But here's the real shift you need to understand. It's not about banks disappearing overnight, it's about their role changing. Think about what happened to traditional retail when e-commerce took over. Did physical stores vanish completely? No. But their dominance was challenged, their business models evolved, and the companies that failed to adapt disappeared. The same thing is happening here. Banks that embrace digital transformation, integrate new technologies, and offer value beyond basic transactions will survive. Those that rely on outdated systems and slow processes, they'll struggle. Because the next generation doesn't think about money the same way. They don't want to wait 3 days for a transfer. They don't want to pay hidden fees. They don't want friction. They want speed, transparency, and control. And digital currencies deliver exactly that. So where does that leave you? Because this isn't just about banks. It's about your position in a changing financial world. The biggest mistake you can make right now is ignoring this shift. You don't need to go all in on digital currencies. You don't need to abandon traditional banking. But you do need to understand what's happening. Because the future of money is not going to look like the past. It's going to be hybrid, a mix of traditional systems and digital innovation. Cash, banks, digital currencies, decentralized finance, all coexisting, competing, and evolving. And the people who benefit the most from that future are the ones who adapt early. So ask yourself this: if the way money moves is changing, are you changing with it? Because at the end of the day, financial security isn't about where your money is stored. It's about how well you understand the system that controls it. Banks aren't going away tomorrow, but they're not untouchable anymore. And that changes everything. If this made you rethink how money actually works, hit that like button. It helps more people see this kind of content. And if you want a deeper breakdown on digital currencies, crypto, or how to position yourself for the future of finance, drop a comment below. I'll see you in the next one.